see. I'm a couple seconds late. Yeah. Oh, I'm only 3 minutes late. That's it. Hmm. Yeah, this way. There we go. I ain't know how I was pulling this thing. Ain't never do right. Gonna give folks a few seconds. Might just be me. I guess people become used to me being live on Wednesdays that this new day is throwing people off. I get it. I get it. This new day is throwing people off. Only for this week. Hola. Only for this week. So I'm guessing people are used to Wednesday so much. Hey, Mother Shop. So people are so used to the Wednesday that they're like, sis, this Thursday, shawty. As people come into the room, I think it says three. I'm like the third person. Thank you, thank you. I had to use something for this head. That helmet was hurting the thug. His helmet was hurting the thug. But yeah. As you come into the room, ladies and gents, you know the routine. Let me know how you feeling. One. Let me see. One. You alright? Five. You staying alive. Ooh, that makes sense. I like that one. That one's good. Me, probably like a 4.6. I'm actually pretty good today. Regardless of what's going on with Rona Mae Jenkins, I'm doing pretty good. Cannot complain. Let me share this. I have to share it. Oh, also, don't forget to share this to your account so more people can watch. I've been doing pretty good, and I'll at one of the points you probably see the caption about what I'm going to talk about tonight. I'm tired. It's Thursday. This week has kicked my behind, but I'll tell you why it's kicked my behind. If you, sister, I need you to be higher than 3. Beloved, I need you to be higher than 3. Junior, I need you to be higher than 3. And Jackie's a 5. I like a 4 point something. 4.67, 5. Like I'm playing gymnastics. Like I was saying, share. I just don't want. How you being difficult? Okay, I'll share it towards the end. I ain't got time. No, you done shared. Thank you. All right, let's get the show on the road. I don't care if I got 4 or I got 400. Get the same energy every time. I feel like Beyonce. Hi, ladies and gentlemen. My name is Nadia C. Vanderhall. I am the owner and founder and the sole person that makes everything happen for the Brands and Brand Strategy Group. I offer up content consultations, as well as coaching within the areas of marketing and money. And the reason why I started doing this weekly spiel and chat is due to the fact that a lot of you ask questions indirectly or directly. Heck, this week I had people actually tag me in comments and had a lot of commentary. And I'm trying to figure out how. I probably weasel that in towards the end, but I'm pretty well open book when it comes to people asking questions, and I am big on it's not no such thing, sorry, as a stupid or dumb or whatever you want to call it question. All questions are meaningful and you want to know, and it's just a way that you want to show that you're trying to learn. And it's like my school teacher / executive producer, who's not here, usually says no such thing as a dumb question. And a lot of the times the questions that you have are questions that everybody else may have, they might not have, and you might trigger the good kind of trying to figure out more about that particular topic. Also, I've been getting a lot of people saying, well, I knew about that, or I knew about this and this and this and that, but compared to the majority of my demographic that looks like me, it's a couple of allies that are in the mix, but it's a lot of people who at least have the same hue as me. And currently, right now, not right now, but over time, we have always been last when it's come to wealth building. We are number one in spending it, but as far as stacking it, we're dead last. No pun. So regardless of if something seems common sense, clearly our net worth or what we have available shows that we have no sense, meaning as in money. So, what did we talk about last week? Talked about a lot last week, and some of the feedback has been really good. But the questions that I have this week have been more so of stuff either people have tapped me about directly, or it has been some stuff that I've been strolling and seeing, and I'm like, let me talk about that. So let me see if anybody else is joining. Yeah. So the first thing I want to talk about is the fact that I went to the store yesterday, which is very rare for me, and saw that you had to have had exact change or use your debit or credit card because they weren't giving back change. I called this a while ago, that cash and coins is two reasons for that. Two reasons why you're going to see more merchants push more. Well, three reasons that you're going to see merchants start pushing more cashless. Hey, mother, seeing more cashless transactions. The first one is Ronald May Jenkins is still here and in full effect, and as CDC and WHO and Dr. Fauci, who's gone rouge, has said that cash and coins can actually transmit diseases and bacteria and stuff like that. So they are trying to lessen that so they can at least help flatten the curve, even if America is more concerned about profit than people. They are trying to flatten the curve. That's the first one. The second one is that, did you know that they're not printing any more money and that they're trying to push America to go cashless? I shared something in my stories talking about that, and I think right when everybody except me got their stimulus checks, that they were initially thinking about the digital dollar. While some may say the digital dollar is a bad thing, technically, if you think about it, your debit card is actually a form of a digital dollar because it's transactional. You're not touching it. You're not touching cash. So there goes that theory about biblical reasons. But I don't know. You don't know. But that's what I'm thinking too. Is that they're going cashless because they're not making any more money. It was a video I put up last week where actually America destroys $6 billion every day in destroying cash and coins. Crazy. You could have gave me that $6 million, sis. I got student loans. But that to second point is again that America is trying to the government and the feds, they're watching probably, trying to push us to go more cashless, look into digital money such as crypto. I've been talking about crypto off and on for a while, and I kept saying I have a feeling that during the summer, thank you, cousin, that during the summer I'm going to be talking about crypto even more. Ta-da! That two reasons of that. Again, they're trying to push the digital dollar because a lot of people were so hyped up about Bitcoin, cryptocurrency. And Bitcoin wasn't tied to anything. So a lot of people saw it as a fad. It was a fad. It's not really a fad because it's still very well alive and well. But it was the starting point for what's to see from Ripple to, God dang, it's like a lot of them, to Dogga. I have a couple of them, so that's how I'm speaking from that. But America is trying to actually create their own dollar, a digital dollar, to stop utilizing cash. I know it sounds crazy, but other countries such as, of course, Japan, China, and all of them are starting to fully move over to having your money traceable through tokens, digital platforms such as Coinbase and things like that. I think Binance. I don't know what they're using overseas, but these are some of the ones that I'm like repeating off the top of my head. It's ones that I know about. Is that these kind of platforms are starting to ramp up a lot due to the fact that America or U.S. feds are starting to push the digital dollar and digital currency. So while I would say it may seem kind of crazy, I think I have a BitPay card coming this week that you can actually start transferring your dollars over to tokens and then start utilizing them at certain retailers, sorry, with using the actual card. It's the same kind of card like you would to hold up your debit card. The ones that is tied to tokens or crypto, it looks just the same as nothing. The only thing is the source that the money is coming from. I'm excited about it, but like I said, I had a feeling we were going to talk about it even more into the summer because America don't have time for it. They're destroying money, so they want to try to cut overhead costs and $6 million a day. We need it right now. But also that they're trying to push a way to track money outside of the traditional forms and traditional means. So I'm pretty intrigued to see how that's going to go. Oh, and the third one, I think, did I say three? So it was cryptocurrency, Corona, and just overall just trying to put a different perspective on what currency looks like in America. And I think that's the main reason is that, again, they're trying to cut costs of putting the digital dollar out there and letting Ben Franklin go. But when the thing is, where the heck is Harriet Tubman? Y'all want to get the digital dollar. Where's Harriet? I'm back. I've been doing a lot of lean in and outs lately. If you looked at my stories, you know why I say that. But that's what the pretty interesting thing about that is that they're trying to push cryptocurrency to make it relatable. But I think the thing that they need to do with that is to try to educate people before you try to throw them in there. Because everybody's not so versed. Everybody wasn't a fan of Bitcoin because they didn't know about it. So I think that that's going to be interesting to see how this cashless society goes. Oh, and also, sorry about that. If you're trying to spend money when you're out and about, I know some people know about this, some people don't. But a good way for you to go cashless is to use Google Pay, Apple Pay, or any. Well, that's mostly what the two banks. Well, two platforms that the banks are utilizing is Apple Pay and Apple Pay, Google Pay, and I think they're trying to come out with another pay platform that is tied to Plaid. Plaid is a fintech company. So if you want to, you can go ahead and upload your card to those different platforms. When you go somewhere, you just hover over it, your money, your page, you're gone, and you don't have to touch anything. But what I hate is that some places you still have to push your PIN number or whatever. But again, if you want to try to be cashless and contactless, Google Pay and BitPay. Google Pay and Apple Pay, and I said BitPay because of crypto, it's going to be your best bet. But I have a feeling that if the digital dollar is not fully introduced within this next round of stimulus or within the HEROES Act, I would not be surprised if that is if we have the certain powers that be into currently that we probably will see it strongly by January. But I know that Uncle Joe is also a fan of it because he wants to start teaching more about financial literacy. So he sees it as a way because kids love it and it's cool. So I'm all for it. The next topic that I have been getting pinged about a little bit is that sis, you keep telling us to get high yield savings accounts, and beloved, that APY is not in the sky anymore. High yield savings accounts is like my thing that I've been talking about a lot lately. Well, shoot, for the past couple of years. And a lot of people are confused to why it's starting to drop beyond the 1.7 and the 1.9. Yeah, I think Ally was hitting at 1.7. Marcus was hitting at between 1.5 and 1.7 percentage. But they're starting to lower, and a lot of people are getting freaked out because they're thinking they're losing money. And then I had someone in the same arena as me or industry as me saying basically high yield savings are trash. No. So the reason why that is happening is of two reasons. Is that, of course, Corona, or Rona Mae Jenkins, I hate saying Corona because Rona. And then the other reason is the federal government, and I think I brought this up before, lowered their interest rate to, I think, yeah, it's at 0 right now. And if the economy does not improve, we can be looking at -0 or whatever, and that has not been seen ever. So that's pretty scary, but it's pretty interesting to see how it's going to impact everything else. It already is impacting mortgages, because right now they're almost at historic lows, which is pretty interesting and good for those that are in that market for a house. Also, but on the other end of it, those accounts that see interest compounded daily, such as high yield savings accounts and other things like that, are seeing the hit, because those financial institutions cannot offer that high yield savings they could previously, due to the fact that Mr. Fed wants to take everybody's bread, and he's making it go lower. But I still advocate for high yield savings accounts. Why? Basic ain't fun. Basic savings accounts are still giving, I think I looked at one, I found an old statement, and I got 2 pennies from my bank when I had a traditional savings account there. 2 pennies out the whole year. And I think that was the time I moved, and I had saved over 4 figures. It only gave me 2 pennies in interest. 2 pennies. Yeah, you new market, but it gave me 2 pennies. So I still stand by high yield savings. What I would say for you that do have high yield savings accounts and you're seeing that the interest rate going down, don't panic. I wouldn't. I would still keep everything as is, still contribute to that account. But I also would not be so quick to snatch my money and put into a regular savings account. A, that's thinking backwards. B, you're not going to see any interest in that. I would rather have 1% interest, or right at 1% interest, compared to 0.0001 interest. I'm sorry, it still holds weight, it still holds value, and it's still a very smart, sound decision. Like I said, I will still look at those accounts who are still trying to stay above the 1.0 APY, because why? They have to stay either within that range due to the fact of the SEC regulations for those types of accounts. So I would not sit there, I would not tell you to pull your money and go put it into a basic savings account. I only authorize, I sound like Sue, oh God. I only say for basic savings accounts, those are for things that you don't have the time to wait 3 to 5 business days, like Lazarus, for your money to come back into your actual checking account. Those are for things that happen at the spur of the moment, and you need the money right then, or something happens and you need the money right then. Those are the good reasons to have savings accounts, but you still put it in your bill fund. Say, this is how much I'm going to have in my traditional savings. But for those of you who are trying to grow some money over time and see more interest back for what you're contributing, I will still stand by high yield savings. So again, high yield savings, long-term growth, even short-term shoot, because you might be stacking quick, still say that. But things that come up and pop up that you don't have the time to wait for your account to come from that financial institution 3 to 5 business days, you still utilize a regular savings account. I still stand, that's not methodology. And I actually just gave someone that feedback a couple weeks ago when they checked in with me from a coaching session to say, hey sis, I'm still, yes, my clients call me sis. I put a certain amount that we agreed upon into my traditional savings. And interestingly enough, this happened, and like you said, I had that money there, and I didn't have to wait 3 to 5 business days for it to transfer. Sometimes it's quicker, sometimes it's not. But I say high yield savings accounts are good for if you're trying to build interest and play long ball. That's what they are for. But for everyday things that come up, keep traditional savings account. But don't expect for you to gain a lot of interest from it. That's it. So they're still good. The next one that someone asked me about directly was about, I'm probably going to butcher the name, the Sou-Sou or Sou-Sou savings plans that I am seeing people pop up about. I'm not against them. And how did I explain them to people, or explain it to the person that asked me about this, interestingly enough, last night? They're like crowdfunding for your friends and family, or people that you know. That's what I would recommend you to do. And for you to be very careful about those different pockets of groups that you're going to be putting your money in. So basically what it's supposed to be is a group of people who agree to put this set amount right in a savings account or into an account, depending on what the structure is, whether it's weekly or monthly. And then they'll hold it. They'll keep doing that for however long they're supposed to say it for. And then if somebody needs it, they're able to get money from that account, but they have to set up a payment schedule to pay that money back. That's pretty much all it is. I do again think they're good. Like I said, they're like crowdfunding for your friends and family. Two things I will call out about them: you have to be careful because you don't know who wants to be a scammer. Two, if you do join one, make sure it's some kind of legal ramifications in place. Do they have documentation? Do you have to sign this disclosure? Do you have to agree to anything? Do you have an NDA? You have to NDA. Who am I? Do you have to make sure legally that Sou-Sou that you're putting into is legally sound? That you actually know the people. You have to be careful about that. And that whenever you do contribute, that you are getting statements to show how it is growing, and then if it's somebody paying money back into it, are they still adhering to what the schedule is? I don't mind them, but those are the things that I will look out before to see if there any legal documentation that you can back up and see why. How much are you contributing monthly or weekly? Are you going to get statements to see how the group is growing? And then, if you or somebody else has to pay back, are they paying back on schedule? Are there any consequences for if they don't pay back on schedule? So that's what I would look for. So I'm for it, as long as it follows those things. Right now, I think I think 2-3 weeks ago I called out that we're going to be seeing a lot of group economics. There's a good book out about that. I'll probably find it and plug it tomorrow. It's a good book about speaking to group economics, and I'm all for it because if you think back to the Greenwood District, which was the Black Wall Street, everybody's pushing up because right now I think this year is the 99th anniversary of its dissolution. But the energy and the vibe right now is matching that because the culture is really trying to pull their money together to either buy back the block literally, or to actually start building and purchasing businesses around that money or anything like that. So I'm all for them, and I'm loving the whole group economics movement. But like, I would still make sure you CYA in anything that you jump into. They're good to just look for. To make sure you're fine. I don't want people getting in there and losing their money because I heard it is some loons that are still there. Scammers are going to still scam, beloveds. So just making sure that you're CYAing and just making sure you're not getting into a blessing loom or wherever they used to be called. Because the people that used to say, what's the thing I put on Instagram the other day, last week, is that the people who would tell me I had to jump in a loom to be rich or to get back this amount of money, they still don't have no money. So just making sure if they are putting money into a savings account with a Sou-Sou, that they are putting it into a savings account that is going to generate some interest, so you are seeing it grow. One thing that I could recommend, again, is if you want to, and I brought it up before, is establishing a trust. A trust can be another form of that. Trust can make you purchase property. Trust can make you a private equity investor and buy into these startups before they even go public. I brought up before how it was at least 5 family trusts that were able to buy into Uber. Imagine what they were. Granted, Uber has not been profitable, but the footprint of the company has grown, so it's still worth money from when it started. So if you are not comfortable in starting a Sou-Sou, that you start looking into other ways of group economics. So I'm all for it. And like I said, as we go through this interesting time of being, then I want to start sharing these different unique ways of unique ways of investing and building wealth through group economics. So that was one that I got a question about. And before, I don't know, I'm just gonna go ahead and jump into it. And one person asked me, I'm going to another question I just thought about. It was like, hey, I did what you said and put some money in Robinhood and I bought some stock. So what I do next? Just watch it? Yes, just watch it. But after you purchase stock, and no matter if it's Robinhood, I can talk about what Robinhood just did today. Sent me an email. If you have Robinhood, you probably seen the email too. I don't know, because they try to act like I'm an influencer, but I'm not. But what was I talking about? Come on, beloved. That you after you purchase your stock, putting the money in, no matter Oh, yep, red. Red and opportunity zones are really good right now for group economics. And I'll finish. But after you purchase a share of stock, you're like, oh, I did it. Now what? Now what, beloved? Yes. After that, you watch the company. But two things also that I want you to do is to, again, look at the prospectus. Look at to see when do they vote on anything. What are they voting on soon? If it's a board director or anything like that. And what can you learn about what the company is doing? I want you to still research that company. Want to know why? Because you technically become an owner when you swipe up or when you purchase. You technically are owner of it. So just like if you own a car, if you own a house, you have to do maintenance on that thing that you own. Granted, now you don't own the whole company, you own a portion of it, but technically you are still seen as a owner or a shareholder in that company. So you still have to do your due diligence to see how is it performing, how's leadership performing. Did they snatch any debt due to Ronald May Jenkins? Are they still having cash? Are they still being seen as a cash cow? How they're still performing. And again, when they start sending these emails about voting and going to these meetings and stuff like that, granted, if you can't go, still vote. Look what they're talking about in those board meetings. Still be knowledgeable of what's going on. So don't just buy it and you can't sit on it, but I want you to know how is it performing, because technically you are seen as an owner. So it's more than just swiping. It's being, you actually have a seat, not at the big table, but at the small table of what that company has to offer and what that company is going to do. Because I think for one company, I had one a couple of weeks ago where they had to vote, of course, on the board of directors. It was 2 seats up, but also it was a purchase on an acquisition that they were looking into. And that information you get before anybody else most times. Or you can kind of see if they're asking about cash or anything like that to know that they're getting ready to make a move. So it's more than just swiping, beloved. So I'm all for that. And I have in the caption, I'm going to recap. If you have not been noticing, I have been writing a lot of blog posts this week, one every day. Because I have placed myself into a challenge where I have to curate a blog post every Monday through Friday for the next month. So keep me lifted. It actually hasn't been bad because I can build content like that. So it hasn't been bad. But some of the things that I want to call out, the first one was I told you on live that I was going to start having this blog series. Well, this blog series called Pandemic Paper. It actually knocked off Monday. I said it was the first one I kicked off with, giving you insight on why I'm calling it that. And then today's blog post was a little bit of tea on me on how during the last recession I was somewhat impacted or didn't write my life story. But I gave 4 things that you should be doing right now to position yourself better during this recession, because we are in a recession. Been in it since February, just so you know. So I use my story as steps for you to start utilizing and building yourself and keeping yourself assured during all this with Ronald May Jenkins. And I, interestingly enough, pulled on Good Times a lot. Yeah, Good Times was all in my blog post. That's all the gifts I use were Good Times. And another one that I brought up today, I think the other day, was another What the Finance, or WTF, on ETFs. So ETFs, if you looked at the creative, you kind of you know where I'm going. ETFs is another way for you to purchase stock. So if you're not comfortable yet with purchasing individual stock, you learned about fractional shares the other week. So now I gave you another one, beloveds. ETFs are kind of like when if you go to Sam's, you go to the grocery store, big box stores, and you want to get the assorted bag of chips, and they're a good price. You go through, take out your time, and you look at all of the actual tip types that are in there. Then you gotta figure out, do I want this one, or do I want that one, or do I want this one? That's how you can buy ETFs the same way as you can fractional and traditional shares. But with ETFs, when you buy that bag of chips or stock, no matter how much it costs, most ETFs have between 50 to more than 100 funds within that stock, that one ETF. So when you buy that assorted box or bag of chips, depending on where you're buying it from, You're buying all the stock that's in there for that one price. I know. But you're buying all the stock that's in there for that one price. And one thing that I call out in the blog post was that even if it's one company that is not performing well, it don't really hurt. Like, what's the whole theory of one monkey don't stop no show, one apple spoils a bunch? In ETFs, it has to be more than one apple that makes the whole thing go rot. Because even if one company goes down, the ETF still stays afloat. You get paid dividends based upon the whole ETF, how it performs, not just one. So if you have just one stock in your portfolio, you get paid dividends based upon that. That one stock can go from $200 down to $10, and you can lose your mind. But if that stock that goes from $100 down to $10 in an ETF, and it only has 10% weight, you ain't gonna feel it. So what I called out in the article is that I want people to start diversifying their portfolio. If you remember the old Dave Chappelle skit with Wu-Tang, that diversify your funds, I want you to think about that too when you're building out your portfolio. It's good to have some traditional stocks. It's good to have your retirement fund. It's good to have some fractional shares, which I would put into the traditional field. It's just how you acquire them. But also I will look into ETFs, mutual funds, and other things like that. So having that strong mix is key. So like I said, if something happens to that one fund outside, if you're watching it, and it drops with the single or fractional share or single hold, it will not impact the rest of your ETF if it's weighing 30% or whatever. And another good thing I love about ETFs is that a lot of them have a mixture of bonds and stock in them. And I think the one that I called out, which is the oldest and coldest and the most popular, is the SPDR, which is all the S&P 500. And it's been around, it's the longest holding one. And it's one of those that a lot of people just throw their money at because they know it's going to be the tightest one. Why? It's like it's the list of the 500 best performing companies in the United States. It makes sense. So even if you don't have the means to buy the S&P 500, the big boy that you see, the indexes, you still can look into the ETF to grab that. Yeah, Wu-Tang Financials, I love that. That you can still obtain that through an ETF. Also, a lot of people are looking into, I called out in the article the type of ETFs they are. There are bonds, commodity, foreign, inverse. I'm missing a couple, but go to the blog post and read. But those are good too to look into. So a lot of people want to say, hey, I want to start investing in the foreign markets. No Forex, please do not don't leave me, but don't spam me. But a lot of people are trading Forex. I'm all for it. Do what you do. Whatever makes you happy, makes you shine. That's good, but it's not me. But if you still want to look into foreign markets, there are foreign ETFs that you can still purchase against foreign currency. Good. Also, for the commodities, that goes into the crude oil, as well as for gold and things like that. So those are seen as commodities. So if you've been wanting to buy, you don't have the land to store a couple barrels of oil, you can still look into ETFs that have crude oil in them. I forgot the name of the one I mentioned before, when the oil was looking like it was on clearance. On Black Friday. So again, ETFs are good if you are seeing investing as a risk. You still want to buy a lot of stock at one time. You're not sure how things work. ETFs are good. The dividends is paid out some monthly and some quarterly. So it's just doing that research to see how they run. And within that article too, I called out some of the characteristics for you to look at. There's ETFs that have popped up recently as of even last year, but the ones that you should look at, those that are at least got a little hair on their chest, that's been around for like 4 or 5 years, that at least have 500 million within their assets. So making sure that they're not, new kids on the block is cool, but also looking to see what other characteristics that make common sense. Also in the blog post, I gave something so you want to track to see how a certain ETF is performing. It's called ETF Scanner. Literally, just Google ETF Scanner. It's going to pop right up. That's a good way for you to research to see how that ETF is performing. So I'm all for individual stocks, and most of the time I start people off with individual stocks for their understanding, and I will say individual fractional for their understanding. But if you just still can't get jiggy with it, you're still scared. If you see stock do this, ETFs are good for you too. I highly recommend them. I don't tell people stuff that I wouldn't recommend. Or how can I say, I wouldn't tell you stuff that I wouldn't do myself, if that means anything. I'm trying to think, what was the other blog post this week? I went to Beloved. I think that might be it. It might be, I don't know. I'm drawing a blank. Let me check real quick. But the contents that that I have been doing this week have been around the whole pandemic paper and other things like that. So next week, the pandemic paper comment that I gave last week about check your check, that's what's up next week. So I broke out pandemic paper into 4 blog posts. I think 4 an apostle, 4 blog posts. And then I am going to formulate it into something else. But also, if you got my email this week, I talked a lot again about group economics, especially for the culture, and how we should. I'm all for Blackout Tuesday, Blackout Day 2020. I'm glad. I think I saw one group that was really tracking it thoroughly through Plaid. If I brought up Plaid earlier in this live, Plaid is kind of the big brother, the little big brother, meaning it's pretty much new. It's small as in stature, but it's pretty much the big brother that a lot of these financial institutions lean on for card processing. So they're a pretty big deal. I think they were just acquired by Visa not so long ago. But beyond that, I really wish through that we could have seen how much money was circulated within the community. If you know, a couple of lives ago and within my Black Dollar post, that I talked about how the lifespan of a dollar within the African American community is little, 6 hours to a week, depending on the location. So I would have loved to know how did Blackout Day actually perform. But one of the things that I called out is that don't let just Blackout Day be the only day that you just purchase from Black people. Make it a starting point for not only supporting Black businesses, but as I put on Instagram about be Black, invest Black, support Black, bank Black, all of those things. Do those things consistently, because that's helping shorten the wealth gap. And I think, who was that? Robert Johnson. No, it wasn't Robert Johnson. It was somebody else said that when Netflix put 10% of their money within a Black owned bank, that if we had that from at least all the major Fortune 500 companies or the big companies, that it would help shorten the wealth gap for African Americans and Caucasians by 10 years. While that is good, the wealth gap is 228 years. But some progress is better than none. So if I called out, I would love to have known how much of an impact was actually done. Yeah, Robert Smith. I'm having a blank today, because if you would have seen all I've done this week, I'm tired. But again, figuring out ways for us to go beyond just buying from Black businesses. Are we banking with Black banks? One United is one that I said I signed on with a couple of weeks ago. They've been having a good run, and they're pretty thorough when it comes to marketing, and I know it when I see it. And I shared the other day all the banks that are out there. So banking Black, investing Black. I've been telling you about crowdfunding opportunities beyond a Sou-Sou or anything like that. So it's ways for us to build beyond just one day. And I don't want it to just be a one-hit wonder, a Blackout Day. I want it to be blackout in other ways where we can start building wealth. Also, I think it was something else, and I can't remember what. But that was pretty much it that I had about. I really think crypto is getting ready to be a big thing right now. It is already, but on the forefront for the U.S. to be actually Thinking about a digital dollar is pretty big. And if Rona continues to stay around, it's going to be something that they're going to push to help flatten the curve within passing out money and distributing money. Again, with the high yield savings accounts, I don't give up faith in those. They are still well to utilize, again, for those that you are happy with having money put away so you don't spend it. If you are happy, you are okay with it taking 3 to 5 business days to get to you like Lazarus. But for those things that pop up and helping, I am pushing for you to have a regular savings account. But I would not move your money just because something went down a half of a point or half a percentage. I wouldn't do that. And then group economics is going to be a very big thing for us, because if you think back to Black Wall Street, as I called out, that was a way that they were able to utilize and grow and thrive so quickly. And while they were targeted, it was still a good lesson for us to utilize 99 years later. And do I have any questions? I'm under an hour. Are you scared? Also, please don't be afraid. Oh, somebody did ask me, how are we seeing, I think it was 1.3 million people actually filed for unemployment for the first time this week, for the last week, which is the numbers are still going up. I think the last number I saw was well over 5 million that are receiving unemployment from the government. Oh, the state of Ohio was able to extend their unemployment benefits, or PUA, to additional 20 weeks compared to outside of the July 31st that the government was proposing. So they were able to do that, so that's a good thing. But yeah, that's pretty much all that I had as far as questions or comments or concerns. And just don't be afraid of what's going on. I know that, that's what the point I was at, that the economy is pretty hard to track. And I know people say, oh, well, the stocks are still doing solid. The exchange as well as the economy, they are related, but they're not twins. Meaning what makes one doesn't make the other one stink. Meaning that if something goes on in the economy, it's not necessarily going to impact the exchange. Exchange, the markets, it's not going to necessarily impact it. It may trigger it a lot, but I think, this is something I also want to bring up, because I got excited thinking about it. I was talking to someone the other day, and they brought up to me something that I shared, and then something that they saw, is that the federal government is buying certain companies' debt and bonds. Certain companies such as Apple and certain companies such as Walmart. I shared that on my stories over the past, I think it was 2 days ago, so it's not there anymore. But yes, the federal government is buying certain companies' debt and bonds so it would not trigger the market. So they're really trying everything that they can right now to not push us to, that last recession, numbers. They're doing everything that they can to put a Band-Aid over a wound that's been bleeding for the past 4 years, if I must say it. So yeah, that's pretty interesting to see, and then to know that Apple doesn't want to give certain people, headphones or anything like that with the new purchase of the new, I think 12, but yet the government is able to bail you out pretty much. And I think that the airline industry is asking for an additional bailout right now. So I would say that while everybody's waiting for our stimulus, they're trying to do everything they can to stimulate these companies, because bankruptcies are becoming a thing that is so repetitive that it's unreal. And I was going to put up a post probably tomorrow, but probably next week, that just because you're not happy or you feel that your savings is not close enough to being where you want it to be, beloved, it's companies that have had billions and billions in revenue that had to still take out a PPP, a EDIL. Why? Because they did not have any cash and they had more debt. Yes, they made revenue, but it did not offset the debt, no Cardi. They still did not have any cash. So do not feel bad about if you're not where you want to be. There's companies that have been around 100 years, 50 years, 20 years, 10 years that needed help from the government and that are going bankrupt. So that shows you that they weren't in a good financial standing, even though you was giving them your stacks. So don't feel bad about that. So yeah. Oh, it's a question. If you were to begin a culture sharing investing program, what would you create? That is something that I actually want to do. And then after I get out this little bubble in my head that I need to get done, that's something that I want to start doing, or at least building something out so people can know how to build one the correct way, so it will not be loomish or scamish. But what I would start to do is to figure if I'm building one and building a program around that, but for you to actually start thinking what are some of the financial objectives. So you remember when I was talking about financial objectives last week? If you cannot pinpoint your own financial objectives and have things done together, that's the point I want to get to. It's going to be kind of hard to correlate that over. So that's one of the things that I will really start to hone in on, is separating within yourself or within the people or the leaders of the group, knowing what are their financial objectives or goals, and who would you want to be in the group, how much would you want to spend, and so forth and so forth. There's other ways that I would do it, but again, that's something that I will actually be working on, because I've had that question asked to me a lot. And it's actually a goal that me and one of my high school friends had for the past 5 years. So it's something that, like I said, it's been tossed around in my head, and that I am trying to work on that in the near future. I'm working on a lot. Bear with me. But that's what I would do. If you want to start an investment club, and someone asked me about that as well, is to figure out what your financial objectives, goals are separately, as well as working collectively to figure out what that would look like. And in my email this week, I called that out, is that yes, we want to build group economics, but make sure that you're able to run just as fast as the rest of the relay team. So that's imperative, especially to group economics, is that it's not just, oh, we pull our money together. It's the awareness. Awareness helps you do action. If you're not aware of what you're doing, the how and the why and all that stuff, the action is going to be null and void, and it's going to be hard to track it. But like I said, I would really hanker down. What's the guy name? It's Leslie Jordan. Well, shit. I would hanker down to figure out what your financial objectives are. Figure out who are some people that you will at least start investing with, and what things you will start to target as well. So that's what I would do. It's a lot of other things that is in my mind and in one of my 4 notebooks that I'm looking at right now. But I would actually, like I said, build something out or a model out soon. Ooh, I'm still gonna hit an hour. Do I have any questions? Any additional questions? That was a great question. Thank you. If I do not, what, it's about to be third quarter. Oh, that's one I want to bring up. It's about to be the third quarter soon. Thank you. It's about to be the third quarter soon. It's going to get very interesting with companies, because now that they have the PPP and we're able to do to keep their head above water, did it still balance the sheet for their P&L to able to still meet earnings, or at least get close? Because I know I saw in second quarter that a lot of companies were either splitting their shares or withholding. That is not a good sign. So I'm getting that the Feds is trying to withhold and snatch up people's debt. You can come snatch my student loan debt if you want to snatch anybody's debt. But I'm glad that they were able to do that, to start the bleeding. But it's really, if nothing is put in place, it's going to be a lot more bankruptcy from companies as we go through Q3. And sometimes I see articles, I don't want people to be scared. I don't want you to be afraid. I just want you to be aware of what's going on around you. So that's why sometimes I share stuff and sometimes I withhold it, because I'm like, they're going to start getting scared. Because I had someone freak out in my inbox yesterday, actually. So, yeah. So, yeah, just keep yourself sane. Check your check. Don't go blowing and giving Amazon all your money. Just be very, very practical. If you want, knowing what your bills look like, knowing what your building fund or your build look like. You can blow, but like I said, don't blow too hard. Because it's a lot of things, and I put in my article today, it's a recession every day for somebody. When people experience job loss, people experience situations that happen for them that they come at a whim, and it puts them at within the negative. It's a recession every day for someone. While they're either in a recession collectively or separately, it's a recession every day for someone. So making those smart money habits prior to experiencing anything like that is critical to help you, again, keep your head above water, stay sane, and to make sure that you still have a livelihood close enough to what you are experiencing currently. Because in my article, my self-reflection today, I think when I got laid off a decade ago, I had to wait for unemployment, and I had a 2 week paycheck, and I think $100 in my savings account. Granted, I have a great support system, but what if I didn't? And what if my bills weren't paid up? So like I said, it could be a recession. It's a recession every day for somebody. Those 1.3 million people that filed unemployment for the first time last week, it's a real recession for them. Because granted, some companies pay a great service package or whatever. Some companies ain't. And then it's a very big backlog when it comes to unemployment filings. So it's a recession every day for somebody. So being sound with your money habits and your wealth habits and everything like that. Oh, also I shared on my personal about, and I might share it here, about the whole Chris Rock joke about rich versus wealthy. If you follow Charlamagne the God, or it's also on Chris Rock's his actual Instagram and his Facebook. The joke was hilarious back then, but it's hitting hard for a lot of people, and how we are so focused on our culture being rich, where other cultures are figuring out how to be wealthy. Chris Rock, and I quote, and I'm paraphrasing him very tightly because I can't remember. But he said, "Rich, if you have a bad weekend or something, you can lose your money. Wealthy, you can cough, you can go through anything, and you still have money. You still have multiple streams of income, in a sense of words." So for the culture, I'm all for being rich. I'm all for being well off. But I want us to either figure out what our wealth formula looks like, what our wealth number is, and what mindsets and habits are we trying to line to get to that point. So it's just interesting that when you hear a joke from years ago and how it still knocks today and clicks today, it's been interesting. Again, I will have you, if you're not a lover of cuss words, I wouldn't, because it's Chris Rock, but it's still teachable moments, and that's what I pride my content on being. Is something I learn or able to utilize something that I see as far as content. Heck, I use potato chips for explaining what ETFs are. So like I said, start working on your wealth habits now. Start figuring out how much it costs for you to get out of debt, that magical number, and then what formulas that you can utilize. Some is the snowball, some avalanche, but still knowing your number will help you figure out how much do I really freaking owe, so you can go ahead and start getting out of debt. So that's it for my ramble today. If I have no more questions, I will be back next Wednesday for another episode of this, unless I have another topic that I want to bring out. Please go to the blog. It takes me a good amount of time to brainstorm, write, design, and upload those blog posts. And I did emails this week. So if you are my email list, thank you. If you are following this page, thank you. I'm just very I have a lot of gratitude for the people who are now starting to realize my work and appreciate it. So it means a lot. So if that is nothing else for my I hit right at an hour. Ramble. I will talk to you next Wednesday at 8 o'clock. If you're watching the replay, do hashtag replay and ask your question. I will answer you right then, and I will also bring it up in the next live. So if you are watching the replay, hashtag replay. Don't forget to share. It's a couple people on here still. So while you're watching, no matter if you're watching it now or you're watching it in the replay, go ahead and share it out. Don't be stingy with me. More people, especially those that look like me, need to know more about wealth. Yeah. So yeah, that's it. Have a good night. Sleep tight. Don't let Carol Baskin bite. Cool cats and kittens. I'm sorry. I'm still on Carol Baskin. So yes, thank you and have a good night. And I'll catch you next Wednesday at 8 o'clock. Drop your questions. Even before then, you can DM me and I'll add it to my roster. So have a good night. Peace.